I had a call the other day with a friend, a young guy. He's in his early 20s. I think he's 23, maybe 24 years old. Had a very successful YouTube channel that he had grown. I can't remember exactly how many, but it was like 900,000. I might be making that number up, but it was big. It was a big YouTube channel. And then he kind of walked away from it because the purpose of the YouTube channel was all around personal development, business, and one of the things that he started to struggle with was the fact that he was so young and he was talking about things that he didn't have a lot of worldly experience on. And so he wanted to stop that. I think he just wanted to take a step away from that and go out into the world and build and actually do things and learn from people further along. And so he took this really cool position working with some badass entrepreneurs and just soaking up experience and wisdom and learning. And he's growing at a phenomenal rate. All that's to say is that he's at this position in his life where he's making really good money. He has opportunities in front of him that could be incredible money-making opportunities in the future, but it's out there, right? Like when you take equity positions in businesses, like it takes a long time for that to come to fruition. And so one of the questions that he's wondering is like, what should I do with my money? What should I be doing? Should I be investing it? And even if you're not a young buck who's making a ton of money, maybe you're a little bit further on in the game, you're a business owner, or maybe you're in a position where you're like, I don't know what to do with my money. I wanted to give a little bit of framework or like some thought process that I go through when I'm thinking about should you invest or what should you invest in rather. And this is not investing advice, it's just a framework, a way of thinking about this. Now, for my buddy who is this young guy who has a ton of earning potential, the advice is going to be very different than if you were in your, late 30s, early 40s, you have kids, you have a W-2. Like for him, where he's at in his journey, and for a lot of people, even if you don't have a lot of earning potential yet in your 20s, maybe you're just coming out of school and you're taking your first entry level position, making $40,000, $50,000 a year, 30,000, I don't know. Like I was making 30 when I came out. At that point, you hear a lot of people saying you should invest as early as possible in life because you want to get compounding interest on your side. But I actually think that if your goal is to live like an above average life and you want to get to that place where you're not just retiring at 65, but you're actually getting there earlier, maybe in your 30s and your 40s, then you need to play the game very differently. And in the beginning, in your 20s, I think instead of just investing $100 a month into your Roth IRA, your 401k, and even if you have an employee match, and I know that's free money, so I'm a little bit contrarian on this, I think your money is best spent reinvesting directly back into yourself. Because at the end of the year, like maybe you put $10,000, $15,000 into your 401k, and over the next 10, 15 years, that will compound into be very, very meaningful amounts of money. But if you could take that $15,000 and invest it into some courses and invest it into some workshops, some masterminds, some coaching, like you invest into your skills, your network, your community, you invest into those things. You take that $15,000 investment and now you go from making $40,000 a year to, in the next year, maybe you're making $65,000, right? So now that $15,000 that you invested back into yourself is translated into higher income. And then the next year you take another $15,000 and now you're making $80,000. And the next year you're making $100,000. And so you're doubling the value each year of that $15,000 effectively rather than just investing it. And I think that's the better way to approach it. Now, if you believe that you have some really high income earning potential in the future as a young buck, or you have a business idea, then all of your time and your money should be going back into that. And the reason is because you have so much time ahead of you. Even if it goes to zero, even if it start over, you have so much time to recoup those things. And so, yeah, I think you need to plan for the future, but I think you're better off spent in the beginning just investing heavily into your skills so that in your late 20s into your 30s, you have maximized your earning potential. And in those years, you can just like really stack the cash in the bank account. And this flies in the face of a lot of common investing wisdom that says invest a little bit every month and like put it away and then it'll compound. And you hear a lot of people talk, even myself, about inflation eating away at the buying power of your money. And people are really concerned, like, should I just have my money sitting into a checking account? It seems like it's just kind of melting away in there like a ice cream cone in the sun. What should I do? Well, what I would do and what I do with my own money, instead of just keeping it liquid in a checking account, I keep it in treasury bills, which are, fairly liquid. I keep them on like a 3-month or 5-month, 4-month cycle. If you're not familiar with a treasury bill, you can buy them very easily through Vanguard. You can go directly to the government and they have a website which is like janky as heck from like the 90s, but you can buy them very, very easily. And effectively what it is it's just a bond backed by the full faith of the American government. So it's about as safe as you can get. And right now you can get yields in the 5.5% range, which is very, very strong. It's a little bit less maybe perhaps than inflation, but that's still great, right? In the grand scheme of things. You could even just put into a high high earning savings account. I like to put it into treasury bills right now. It's just a little bit safer given all the bank froth that we've seen in the last year with SVB and First Republic going under. So I prefer just to keep my liquid cash in a little bit safer investment vehicle. But usually I'm not too concerned about the banks going under. So you could just put it into a high yield savings account. Now, that for a lot of people is all you need to do in the beginning. Just keep investing back into your skills, put your liquid cash into something that's earning a little bit of yield, and don't worry about it. Don't worry about the opportunity cost of inflation eating away at your money, because your goal is not to earn a 10% return. Your goal is to 100x your earning potential every single year, so that by the time you're 30, 35, 40, you're making 10, 15, 20 times as much as the average 30 or 40 year old, right? Instead of getting to 40 and making $100,000 or $150,000, $200,000 a year, your goal is to have the earning capacity to go out there and make $1 million, $2 million, $3 million, right? And suddenly the 10% interest that you would have been earning on that $15,000 a year doesn't really matter all that much. So that's my contrarian take on that. Now, if you're further along in the game, you're in your 30s, you have kids, you have W-2, you're not necessarily geared towards like making insane amounts of money in your life, you just want something a little bit more safe and secure, then yeah, start looking at other investment vehicles. Get that money working harder for you than you worked for it, whether that's index funds in the stock market, into real estate syndications, get into REITs, like bonds. Like there's so many different ways that you can invest. I think the only wrong thing at that point is to not do anything, to just sit on your money and do nothing. So the advice kind of shifts as you get a little bit older and your perspective, your situation changes, as you would expect, right? Context is everything. So this message today, this podcast was really geared towards those young folks, because that's who I was talking to. My buddy who is, again, his low 20s, mid 20s, I guess, rather. And just a different way of thinking about it, which, for myself, I did not invest into my earning skills in my early 20s and my mid 20s. It wasn't until my late 20s that I started getting really serious about that. And by my early 30s, mid 30s, I was making way, way more money than the average 30-year-old. And it was because I took a different contrarian approach to the world of investing. Rather than just stocking away a little bit at a time, I just poured it all right back into myself, into my personal development, my skills. And as a result, I now have skills that are going to compound until the day I die, and they're only going to get more and more valuable as I continue to refine and hone them with time and experience. So that's what I would do is if I was young and just starting out, or trying to figure out what to do with my money. So hope this brings you guys a little bit of value. As always, appreciate you checking out the podcast. We'll catch you back around these parts tomorrow, but until then, stay hyper focused, my friend.